You've probably heard this line before. Rich people don't pay taxes. Sounds like an exaggeration, right? But what if I told you that in some years, the richest people in the world paid less tax than you, and did it legally? Leaked financial records once showed billionaires like Elon Musk, Jeff Bezos, and Warren Buffett paying almost nothing in income tax. No secret deals, no crime, just clever use of rules that already exist. Meanwhile, ordinary people lose a big slice of every paycheck before they even touch it. And that's the point. The rich don't earn money the way you do. They don't fight the system, they understand it. Imagine two people living on the same street. One drives an old car, pays taxes every month, and hopes for a raise. The other owns companies, takes private jets, and somehow pays less tax than his neighbor. The difference isn't greed, it's strategy. So how do they do it? Let's open the playbook and see the secret tricks rich people use to keep more of their money. 1. They don't earn like you do. Most people make money through salaries. The rich make money through assets, stocks, real estate, and business ownership. Salaries are taxed first. Investment income is taxed later, often at a much lower rate. That's why Warren Buffett once said he pays a smaller tax rate than his secretary. His income isn't from working hours. It's from capital gains that he controls when to sell. Timing is power, and power saves money. 2. They use companies as shields. Rich people rarely own things personally. Their companies do. Think about it. The car they drive, the phone they use, even the dinner they host for clients. It's all under a company expense, and business expenses come out before tax. An employee earns, gets taxed, and then spends. A business owner earns, spends on the company, and only then pays tax on what's left. Same effort, different order, completely different outcome. 3. They turn debt into cash. When most people hear loan, they think debt and interest. The rich hear loan, they think tax-free money. Instead of selling investments and paying capital gains tax, they borrow against their assets. Imagine you have 10 million in stocks. You borrow 2 million against them. No tax, no sale, and your investments keep growing. It's called buy, borrow, die. They buy assets, borrow to live, and when they die, their heirs inherit those assets with minimal tax. That's not luck, that's design. 4. They hide wealth inside trusts and foundations. A trust is like a vault that holds money or property. Once it's inside, it's protected, and often taxed less. On paper, the rich don't own it anymore. In reality, they still control how it's used. Then there are foundations. They donate money, get tax deductions, and still direct where that money goes. It's generosity that doubles as strategy. 5. They let real estate do the work. Real estate gives two things, income and invisibility. Through a rule called depreciation, investors can claim their property is losing value every year, even when it's actually worth more. That paper loss cuts their taxable income, while rent keeps flowing in. So they earn money and show a loss at the same time. That's why the rich love property. It pays them and protects them. 6. They think beyond borders. The ultra-wealthy don't just diversify investments, they diversify locations. They set up companies and accounts in countries with lower tax rates, a move called tax residency planning. While most people pay whatever their country demands, the rich choose which country to pay. It's not hiding money, it's placing it wisely. 7. They reinvest instead of spending. Middle-class logic says earn more, spend more. Rich people logic says earn more, own more. They pour profits back into businesses or new investments, often deferring taxes in the process. Reinvested money keeps working, compounding, and growing outside the reach of immediate taxation. Their cycle is simple. Money earns, money reinvests, taxes delay, wealth multiplies. 8. They hire the smartest minds. The rich don't just have accountants. They have architects of money, tax lawyers, advisors, strategists, people who know every line of the code and every legal shortcut. For a billionaire, paying a tax expert $100,000 can save millions. That's why knowledge isn't just power, it's profit. As Judge Han once said, there is nothing sinister in so arranging affairs as to keep taxes as low as possible. The real lesson: the system isn't broken. It simply rewards people who understand how it works. Governments encourage investment, job creation, and risk-taking, and tax codes are built around those incentives. The rich follow the rules that most people never bother to read. So the next time you see someone wealthy paying almost no tax, remember, they're not cheating. They're playing the game better. And the moment you stop asking, "How much do I make?" and start asking, "How much do I keep?" you've already stepped onto their side of the board.